Inshallah, we are going to start with a new chapter, chapter number 16, regarding the allocation of joint products and the byproducts. Of course, before starting with the different methods to allocate joint costs, we need to understand what is the definition of joint costs. This chapter, this chapter number 16, regards the allocation of something called joint costs. So first of all, we need to define what do we mean by joint costs. So what do you think is the definition of joint costs? Of course, you may have some ideas from only the term. It is called joint costs. Some of us maybe know that we have sometimes production processes that yields more than one product. The same manufacturing process, the same production process does not only result with one product, but result with more than one product. For instance, let us take the petroleum. Petroleum, or the distillation of petroleum, yields more than one product. It yields gas or natural gas, let us say, and also crude oil. Or the extraction of petroleum would yield the natural gas or gas and the crude oil. Let us take, for instance, the crude oil itself, or the distillation of the crude oil itself. The crude oil, or the distillation of this crude oil, or this production process of the crude oil, will yield more than one product, like, for instance, tar, kerosene, gasoline, and so on, and so much different products. Therefore, the cost of these such production processes are called joint costs. So what is the definition of joint costs? Yes? Excellent. Excellent. Therefore, joint costs are costs of production processes that yields not only one product, but more than one product. Any production process, any cost of any production process that yields more than one product is called something, or a term that is called joint costs. The byproduct is one of the product, one of the products that we are talking about. For instance, the joint costs that are incurred within this production process may yield, for instance, product A, B, and C. One of these products may be something called byproduct, and we are going to understand what do you mean by a main product or a joint product or a byproduct as we go along in this chapter, inshallah. But the byproduct is one of the products that we are talking about. Therefore, this is the definition of joint cost or joint costs. And this chapter, or chapter number 16, regards the methods by which we are going to allocate these joint costs onto the different products. This is the main point of our chapter. How we are going to allocate or divide these joint costs among our different products of this production process. Any questions? Now, let us move on to the next term, which is the split off point. Of course, the joint costs within this production process that yields more than one product will be incurred until a specific point. After that point, the different products will be separated and will be identified separately. This point is called the split-off point. Therefore, after the split-off point, there will be no longer joint costs. Before the split-off point, the costs that are incurred within this production process are called joint costs. Think of it as the following. Let us consider any production process. This production process yields 3 different products. Let us say product A, product B, and product C. Of course, all the costs of the process until we reach the split-off point is called joint costs. This is the main production process. Therefore, within this process, all the costs that are incurred in this main production process is called the joint costs. Until this point, or until a point where we can separately identify product A as a separate product, product B as another separate product, product C as another separate product. This point that we are talking about, which is this point, is called the split-off point. Therefore, any costs that are incurred before the split-off point is called joint costs, while as any cost that is incurred after the split-off point, maybe we need to process further product A in order to be able to sell it, or in order to be able to sell it with a higher price, for instance. Any costs, whether it is production, whether it is marketing, selling, administrative, whatever the cost that is incurred for this specific product or for these specific products is called not joint costs, but separable costs. Therefore, these costs after the production are called separable costs. Of course, we incur these separable costs in order to, let us say, make these products either saleable, because sometimes some of these products directly after the split-off point cannot be sold directly. They need to be reprocessed or further processed in order to be saleable. Therefore, these separable costs are costs that are identified and traced to these specific products. Any cost that is traced to a specific product after the split-off point is called a separable cost. Of course, after product A has been further processed, maybe the product would be double A. And after B is further processed, maybe the product is double B, for instance. And after the separable cost, after the further processing of product C, maybe the product is called double C, and so on. Therefore, any cost before the split-off point is called joint costs, And our main idea of this chapter is how to allocate the joint costs on product A, B, and C. Any costs that are incurred after the split off point, after each of these different products can be identified separately, is called separable costs, because these costs can be traced directly to these specific products. Yes?
But this product can be sold entire or...
Oh, of course.
Right?
These products could be sold at the split off point and could be sold after further processing. I'm not talking here about whether to sell them after the split off point or to sell them after further processing. This decision will be considered in details in management accounting. Whether to sell or process further, this is a decision that you will take in details in management accounting courses. Therefore, our main idea here in cost accounting 2 is to understand the methods by which joint costs, or the methods to allocate joint costs onto the different products that are yielded after the split off point. Therefore, we are not going to consider the separable costs, because the separable costs are identified or are traced directly to these different products. But our problem in cost accounting, that we have these common costs or joint costs that we need to allocate onto the different products. Any questions until now? Now, the products or the results, let us say, of any joint production process, we said it might yield different products. Now we need to consider the term product. We shall not consider, or we shall not consider all the results of this production process as products. Because the results of the production process, let us say we have a joint production process that yields, let us say, 3 different results. Result A, result B, and result C. Why don't we call them products? Because these results may either have a positive sales value, a negative sales value, and or a 0 sales value. Therefore, if we have, for instance, result A with a positive sales value, this shall be called a product. While on the other hand, if the result have a negative sales value or a 0 sales value, these 2 results, which is result B and result C, will not be called a product. Any questions? Therefore, if we consider our first example, product A, product B, and product C, all these results have a positive sales value. Why? Because it is called a product, and we do not call a product unless it has a positive sales value. Of course, any result that does not have a positive sales value, whether it is negative or 0, it is not called a product. It is called a result, it is called by its name and so on, but we do not call it a product because the term product means that it has a positive sales value. Any questions? Now let us consider the sales value itself, or the sales value of a product. If we have a positive sales value, we have a positive sales value, which means that we have a product. This positive sales value could be a high value or could be a low value. What do you mean by a high and a low value? Or how can we designate that this value is high or is it low? How can we tell that if a value is high or low? For instance, the value or the saleable value of product A is $100,000. Is it high or low? For instance, B is 500,000. Is it high or low? C, for instance, 10,000. Is it high or low? It depends upon its relation or percentage of the total sales value. Therefore, we are considering the high or low in relation to the total sales value of all products. If we have, and of course, these values or this designation of the positive sales value, whether it is high or low, it depends on the organization. Some organizations would designate a product as a high value, and others, the same product could be designated as a low value. Therefore, there is no clear-cut definition of what is high and what is low, but you should know that these concepts are determined according to the relation of the sales value of this product from the whole sales value or the total sales value of the products that are yielded of this joint process. Now, high positive sales value could be only one product, which means, for instance, let us take our example of product A, product B, product C. And according to the policy of the organization, they designated that product A is the only high positive sales value product, while as product B and product C are low positive sales value. Because as we said, the product does not, or the term product is not called or it is not said unless these products has a positive sales value. Therefore, according to our example, product A has a high value, while as product B and C have low values. Therefore, if we only have one high value product, that means that this product is called the main product. On the other hand, what if we have more than one high positive sales value product? For instance, in our example, according to the policy of the organization, they designated that product A and product B is considered to have a high value. Therefore, in this case, we do not only have one main product, but we have two main products. These products are called joint products. Now let us take the other side of the positive sales value, which is the low sales value. Any product that have a low sales value, whether it is 1, 2, 4, 5, it is called a byproduct. Therefore, always low positive sales value or low positive sales value products are called byproducts. For instance, in our example, if product A and B are high positive or have high positive sales value, and product C have a low positive sales value, therefore product A and B are called joint products. Product C is called byproduct. On the other hand, if product A have a high value, while as product B and C have low values, therefore product A is called a main product, while as product B and product C is called a byproduct. If we have, as we said, if we have two or more, therefore we will call them joint products. If we have two or more, or we have more than one high positive sales value products that was yielded from our joint process, these products are called joint products. Any questions? Of course, these are the terms in order to understand how we are going to allocate and why the methods that will be used along the way for the high and the low products. Any questions? Of course, they gave us some examples of some of the industries that have this dilemma of joint costs or the allocation of joint costs, or they have joint processes that yields more than one product. As we can see here, for instance, the extraction or the extractive industries, for instance, the coal, we have coke, gas, benzol, tar, ammonia, and so on. These are, or we have more than one product that is yielded with the same extractive process. For instance, in the agriculture and food processing industries, for instance, the cacao beans have the cacao butter, cacao powder, drink mix, tanning cream, and so on. Therefore, as we can see here, the processing of the cacao beans will result more than one product. For instance, in our chemical industries, for the crude oil, we will have, or this joint production process or this joint chemical process within any refining of the crude oil will yield not only one product but more than one product, like the gasoline, kerosene, benzene, naphtha, and so on. Any questions? These are, of course, among various examples of joint processes or joint manufacturing processes. Any questions? Of course, as we can see here, all what we said earlier can be illustrated and summarized in this illustration or this diagram. As we can see here, if we have a single production process, this cost of, or the cost of this single production process is called the joint cost. Of course, if we had two positive values or two high positive values as products, they are called joint products. If we have only one, it will be called main product. And of course, if we have a low product or a low positive sales value product, it would be called a byproduct. And for instance, the steam that comes out from this production process, it has a zero sales value, because do we have a sales value or a positive sales value on the steam? It is recycled in the environment. Therefore, we are not going to sell this part of our products or this part of our results. Therefore, this is an output with a zero sales value. It is not considered as a joint product. It is not considered as a byproduct. It is not considered at all. The negative. Now, who can tell me how a result of a joint production process could be negative or have a negative sales value? Is there something called the negative sales value? How come? Yes.
Maybe you will pay cost, environmental cost for...
Excellent. For instance, if this production process yields a toxic substance or waste, of course, the toxic waste could not be recycled onto the environment without any care on what this waste would do to the environment. Therefore, we need to pay money, we need to incur costs in order to get rid of this toxic waste. Therefore, we will not be able to sell this toxic waste, but instead we are going to incur costs in order to get rid of this toxic waste. Therefore, the steam has no effect on the environment. Therefore, it is recycled into the air without any problems. Therefore, the getting rid of the zero sales value products or results would not have any effect or would not incur us any costs. While as, for instance, the toxic waste is needed to be get rid of, therefore it cannot be recycled into the environment. We need to get rid of it in a safe manner. Therefore, we need to incur costs in order to get rid of these not products but results. Therefore, incurring costs while not having any return or any benefits in return would yield us a negative sales value for this result. Of course, any costs or any negative sales value for any product should be added to the joint costs. For instance, if the joint costs here are $100,000, for instance, and getting rid of the toxic waste would cost us, for instance, $10,000. Therefore, the joint cost is not only $100,000, but $100,000 plus the $10,000. Therefore, we need to add the negative sales value onto the joint costs in order to allocate this total cost onto the joint products and the byproducts. With the same manner, yes, with the same manner. Any questions? Now let us consider the reasons behind allocating joint costs. Why do you think that we need to allocate the joint costs? We said that the main reason of this chapter is to understand the methods by which we are going to divide or allocate these joint costs onto the different products. So, is it vital to allocate our joint costs? Is it that important? And why do we need to allocate it or allocate these costs onto the different products? So what do you think are the reasons? Why to do it if there are no reasons? So what do you think are the reasons? Why do you think we need to allocate, or we need to know the cost of product A and product B and product C, or let us say know the value of the product A cost from the joint cost, and the product B cost from the joint cost, and product C cost from the joint costs? First of all, not to fall in the problem of overcosting and undercosting. The allocation will yield this problem. But if we did not allocate these costs, we will not have undercosting and overcosting. Correct? We have the problem of undercosting and overcosting after the process of allocation. But if we did not have the process of allocation, we would not have the problem of undercosting and overcosting. Excellent. This is one of the decisions that needs to be considered. For instance, product A is sold for $10, for instance, while as the cost of, or the joint cost that is allocated to product A is $11, for instance. In this case, I would know that product A is yielding losses, not yielding profits. Therefore, I can re-evaluate our entire process. Is it worth it or not? Therefore, we need to consider the costs in order to understand, or in order to make the pricing decisions, in order to evaluate the performance of our manufacturing process, and so on. Therefore, a lot of the managerial decisions are based upon our knowledge of the costs of the different products that are yielded after a joint process. What else? You as accountants now, do we need this information in order to say we produce our financial reports?
Not to do cost-substitution.
We took in Cost Accounting 1 that cost accounting as a system provides information to financial accounting and management accounting, correct? We said that cost accounting provides the information for financial accounting in order to prepare our financial statements. Our financial statements, according to generally accepted accounting principles, needs to allocate or needs to designate the cost of each product in order to designate what are the inventoriable costs and what are the cost of goods sold after the selling of these inventoriable costs, correct? Therefore, if I was not able, or if I'm not going to allocate the joint cost onto product A and product B and product C, how we are going to know what is the amount of inventory to be reported at the end of the year for product A and product B and product C? How we are going to know what is the cost of goods sold that should be designated or should be amounted in the income statement? Therefore, we need to allocate the joint cost onto product A, product B, product C in order to first of all designate the ending inventory amount in the balance sheet and designate the amount of cost of goods sold of these products within a year in the income statement. Therefore, as we can see here, we need it for our financial statement preparation, of course according to generally accepted accounting principles. We needed to make different managerial decisions like pricing, for instance, right, like evaluating the efficiency of our production process, like evaluating, for instance, the productiveness of these processes and also the profitability of these products. We need to know all this information for these different decisions that are done by the management. Any questions? Now, let us go back to the main point of our entire chapter, how we are going to allocate the joint cost onto the different products. Of course, we have two main categories of methods. The first method uses market-based data. The second method uses a physical measure data. Therefore, we have two different types of allocation methods. The first allocation methods, or the first group of allocation methods, uses market-based data or market-derived data, while as on the other hand, the second classification uses physical measures data. From the market-based, or this group, have more than one method. The first method is the sales value at the split off method. The second is the net realizable value method. And the third is the constant gross margin percentage method. On the other hand, the physical measure is only one method. Of course, as we can see here, the market-based uses the amounts of dollars here, as we are going to see and discuss later on. These amounts are in dollars, but for our physical measure methods, we are not going to consider the dollar amounts, but we are going to consider the physical measure amounts, like the kilos, like, for instance, the feet, the quantities, and so on. Therefore, allocate, or this type of methods, allocate using the tangible attributes of products, like pounds, gallons, barrels, number of units, and so on. Any questions? Now let us consider the methods. We are going to take two examples. Example 1 will show us how we are going to allocate using the sales value at the split-off point and the physical measures method. And we are then going to take example number 2 that will show us how we are going to use the net realizable value and the constant gross margin percentage. NRV method, of course. Let us start with example number 1. As we can see here, Farmer's Dairy purchases raw milk from individual farms and processes it until the split-off point, when two products, cream and liquid skim, emerge. Therefore, we have two products, two main products. Therefore, these are called joint products. These two products, or these two joint products, are sold to an independent company which markets and distributes them to supermarkets and other retail outlets. Therefore, from this example, we know exactly that these products are sold exactly after the split-off point. No further processing is done to these products. In May 2012, Farmer's Dairy processes 110 gallons of raw milk. This is the joint cost, or the joint process. The joint process says it processes 110,000 gallons of raw milk. During processing, 10,000 gallons are lost due to evaporation and spillage. Therefore, 10,000 will be lost. While as the joint production process will yield 25,000 gallons of cream and 75,000 gallons of liquid skim. Therefore, this is the information according to our example. As we can see here, we have this illustration data. The joint costs, or the processing of the 110,000 gallons of raw milk, will cost us $400,000. Now we need to divide this $400,000 onto the two joint products, the cream and the liquid skim. Of course, we do not have any beginning inventory. Of course, the beginning inventory here is in gallons. Therefore, we have 0 for both. The production, as the example stated, we have 25,000 in May 2012 and 75,000 gallons of liquid skim also in May 2012. Of course, we sold in May 2012 20,000 gallons and 30,000 gallons. Of course, if we sold 20,000 and we had available 25, therefore 5 would be what? The ending inventory. Here it is the same. If we had available 75,000 and we sold from them 30, therefore the remaining would be 45, which is an ending inventory, of course, in gallons. The selling price per gallon is $8 and $4. Now, of course, this is an illustration. As we can see here, this is the split-off point. After the split-off point, we can identify separately the different products. Before the split-off point, this is the joint process. This is the joint production process, which incurs joint costs. Therefore, as we can see here, the amount of joint costs is 400,000 by processing 110,000 gallons. Of course, it yields 25,000 gallons of cream and 75,000 gallons of liquid skim. Therefore, this illustration gives us a nice summary of our example. Now, let us consider the sales value at the split-off point. What do you think we need to do in order to allocate the joint costs onto the different products? From the term itself, sales value at the split-off method. Therefore, this method will use at the split-off or directly after the split-off point. Therefore, we are going to allocate the joint costs using the percentage of the sales value of these different products from the total sales value of the total products. Therefore, we are going to calculate and allocate the joint costs using the percentage of the sales value of each of these different products from the total sales value of these different products. Let us now consider, as we can see here, uses the sales value of the entire production of the accounting period to allocate the allocation percentage. Therefore, we are going to use the total sales value of, if this product A has a sales value of 100,000 and B has 200,000, for instance, and C also have 200,000, therefore the total sales value is 500,000. And then we are going to allocate the joint costs according to the percentage of the 100,000 to the 500,000. We are going to allocate to product B by the percentage of 200,000 to the 500,000. And also, it would be the same for product C because it has also a $200,000 as a sales value. Let us take the example that is according to our book. As we can see here, the first thing that we need to do, we need to calculate the sale or the total sales value, because according to the total sales value, we are going to allocate joint costs. Therefore, how we are going to calculate the total sales value? We need to calculate the sales value for the cream and calculate the sales value for the liquid skim, and then add these two up. It would give us the total sales value. Therefore, according to our example, we had 25,000 gallons of cream, and the sales value of each gallon is $8. Therefore, $8 multiplied by 25,000, it would give us $200,000. 200,000 is the sales value of cream. Now, on the other hand, we have 75,000 gallons of liquid skim. And the liquid skim is sold by $4 per gallon. Therefore, 75,000 gallons multiplied by 4, it is 300,000. Therefore, 300,000 is the sales value of the liquid skim. Of course, as we can see here, we are calculating the sales value not only for the sold units, but for the produced units. Why? Because the joint costs should be allocated to what was resulted or what was yielded. Correct? Therefore, we are going to use the total quantity or the total quantity of production for these two different products. Any questions? Therefore, after now getting the sales value for the cream and the liquid skim, and as a total, now we can get the percentages. We need now to calculate the percentage of the 200,000 from the 500,000 and of the 300,000 from the 500,000. Therefore, we could divide the 200,000 by 500. It would result by the amount of 40%. And the 300,000 divided by 500,000, it would result by the amount of 60%. Which means that the sales value of cream is 40% of the total sales. And for the liquid skim, the sales value of the liquid skim is 60% of the total sales. This is the meaning of the 40% and the 60%. And always, these two should add up to 100%. Always. Now, let us allocate. Yes?
How could we decide now, after we know the sales of each one from the total sales, that it's high or not?
We are... Yani, before the allocation of these joint costs, we need to designate whether it is high or low. And as we said, it is according to the policy of the organization. Sometimes some organizations would say to us, the cream for us has a low value, therefore it is a byproduct. While as the liquid skim has a high value, therefore this is the main product. Some other organization would say, for instance, that both are high value, for instance. Therefore, these are joint products. Therefore, I cannot say to you that, for instance, the 40% is high, or the 10% is high, or less than 10% is low. I cannot designate this because this depends upon the policy or upon their analysis of the products that they have. For you, in the exam or in the questions, it would be given, of course. Or the policy would be given. You should not take it into consideration that always we are going to give you that this is a joint product, or these are the joint products, and this is the main product, and this is the byproduct. We could give you the policy, and you can decide according to this policy. But always we need to give you the policy, or we need to designate for you what is the byproduct and what are the joint or the main products. Therefore, as we can see here, we calculated the percentages, therefore we need to allocate the $400,000 using these percentages. Therefore, the first product, which is the cream, would be allocated by 40% of the 400,000. And the second, which is the liquid skim, would be allocated by the amount of 60% of the 400,000. Therefore, as we can see here, we divided, or we allocated the joint cost according to the sales value after the split off immediately. Therefore, 400,000 multiplied by 40%, 160,000, and 400,000 multiplied by 60%, 240,000. Of course, adding up these two numbers should always equal the amount of the joint cost, which is the 400,000. Any questions? Now, of course, by this we have, of course, it is so easy, and there is no any problems in this allocation. Therefore, after designating or calculating the allocation of the joint cost, we need to calculate the production cost per gallon in order to make our income statement. Therefore, how we are going to calculate the production cost per gallon? We will divide the costs by the number of gallons. Therefore, here the cost is 160,000 and it yielded 25,000 gallons. Therefore, the production cost per gallon is $6.4 for the cream. While as for the liquid skim, the cost of producing the liquid skim was 240,000, which yielded 75,000 gallons. Therefore, 240,000 divided by 75,000. Therefore, the cost per gallon is $3.2. Of course, we are going to use these numbers in our income statement preparation. Now, let us consider the income statement. Of course, revenues minus expenses, or minus the cost of goods sold. Therefore, revenues would be according to the amount sold. As we can see here, all of our allocation of the joint costs were according to the production or the gallons that has been produced. But now, in our income statement, we need to consider only what has been sold. Of course, 20,000 gallons of cream was sold by the amount of $8, therefore 160, while as 30,000 gallons of the liquid skim by the amount of $4, therefore 120,000 are the revenues for each of the products, and for the organization as a whole, 280. Now we need to deduct the cost of goods sold. Of course, the cost of goods sold, as we took in cost accounting 1 in a manufacturing process, how we could calculate the cost of goods sold. Beginning inventory.
Must
plus the cost of goods purchased according to our merchandising organization. But for our manufacturing organization, the cost of goods produced. Therefore, the production costs here would be added to the beginning inventory. Of course, the beginning inventory is 0. Therefore, we would not have any amount for the beginning inventory. Therefore, this is the production cost, which is the 40% multiplied by 400,000 and the 60% multiplied by the 400,000, which is the same numbers that was calculated before. And for the organization as a whole, it would be 400,000. Now we need to deduct the ending inventory. Of course, the ending inventory is 5,000 multiplied by what cost? The production cost per gallon. We need to deduct the ending inventory. The ending inventory would be calculated using the production costs. Therefore, according to our production cost, it would cost us $6.4 for the cream per gallon and $3.2 per gallon for the liquid skim. Therefore, we have the ending inventories. Now we could calculate the cost of goods sold, and of course revenues minus cost of goods sold will give us the gross profit, or in this case the operating income. And of course, dividing the gross profit by the sales, it would give us the percentages of the gross profit margin. Any questions? By this, we have come to the end of this lecture. Inshallah, we are going to continue with our example and our methods in the coming lectures. Thank you for listening, and I'll see you the next time, inshallah.